Welcome back to the channel of Truth, Trust, and Transparency. Now, I actually had another video planned for today. However, some breaking news has came across my desk and has been emailed and circulated to pretty much every broker in the country. A couple of mates have sent this to me now, and we've spoken about it briefly. But breaking news is that Macquarie Bank, now earlier this week, for a little bit of context, Macquarie Bank came in and said, look guys, we're going to limit the amount of entities and new entities that new customers can use with us down to one, which we're talking about. Very interesting. That in itself is huge news. Now, what has just been sent out today, 30th of October 2025, may we remember this day and compare it to potentially the APRA of 2017, 2019. But really interesting. I'm going to read out for you guys, but essentially Macquarie has sent out to all brokers an important update on trusts and companies. And this is what it reads. We're getting in touch to let you know about further changes we're making to trust and company loans. From tomorrow, Friday, 31st of October 2025, we're pausing all new lending to trusts and companies. This decision follows our communication earlier this week and will mean we won't accept any new home loan applications where the borrower is a trust or a company. What does this mean for you and your customers? Our core home loan offering remains unchanged for borrowers who are individuals. This includes owner-occupiers and investors with PAYG or self-employed income. For borrowers who are individuals, we'll continue to accept income from trusts and companies. That's important to note. Existing home loans to trusts and companies are not affected by this change. So everyone that has got in and set this stuff up now is unaffected, myself included. Why are we making this change? We've considered a range of factors which we've outlined below. Now get this. This is what Macquarie Bank have said. With application volumes increasing, we're adjusting our approach to ensure we continue delivering market-leading turnaround times and high service standards for brokers and customers. This is the groundbreaking moment. Macquarie Bank have said, why are they making this change? To pause all new home loans for when the lender is a trust or company. The emergence of strategies on social media aimed at maximizing lending through trusts and companies. Wow. We know who to blame. I only done an episode on trusts yesterday talking about this very issue. Upcoming, and then the last one is upcoming AML Tranche 2 regulations, which require additional verification steps for trusts and company loans, making the origination process more complex and time-consuming for banks, brokers, and customers. What's happening to submitted trust/company applications? Applications for new lending to trusts and companies received by Thursday, 30th October 2025 will receive enhanced assessment. We appreciate your understanding and ongoing support, and we'll continue to share additional updates. This is huge. So if you're all listening to this and you're thinking, shit, that is my strategy out the window, that is the number one issue as well, because I think, and as I've said on this channel before, and I've said to you guys, it doesn't always suit people. People don't always need to do it. It is often talked about in a principle where a lot of people don't really understand or haven't done that sort of lending. And again, it's this issue of infinite money glitch where, we just knew that something like this was going to come about. I think what's important if you are looking to, if you are looking to still build a property portfolio, is this the end of the world? I don't think so. It's obviously makes it a little bit more trickier. However, there is indications that they might bring in some further, verification, or they will need some sort of different or they will need, some sort of more regulations. But, as I've interviewed plenty of guys on everything property, a couple of mortgage brokers, a couple of property investors with 10, 15, 20 and more properties, they have done a lot of people have built property portfolios outside of just using trusts. They've built it by building up their income, by building up and having those cash injections, good income, good cash, and they've been able to build out property portfolios. So it can be done, and it has been done, and it will continue to be done. I think another thing that I want to add on here as well, and that people will need to now get creative with, is, your different tiers of lending. We don't just have the big four banks, and I know, not all brokers are equal, and I know there's a lot of brokers who have really good different tiers available to them, and they have different opportunities. And I just think it means that you potentially need to go down the rungs of tiered lending of those different banks, instead of that interest rate being a 5%, and if you need to get this property over the line, then you might have to eat glass for a bit with having a 7% interest rate. But I always say to people, it's better to get in the market for a higher interest rate. We know that interest rates don't matter on this channel, but get into the market for that with that higher interest rate, because you secured the property, you've locked in that price, compared to if you were to wait, maybe 6-12 months to go back to use a tier, one of the top tier banks, one of the big four. By the time you've done that market's moved, and that property went from being 500,000 to maybe 600,000. So a lot of people, I think, now will need to get, what I would do now is I'd speak to my broker if I'm looking to make a purchase in the trust and you haven't got it over the line now. Okay, this just in, as I was making this podcast, I have just received a letter. This is the 9-page letter that I read about. Wow. I've just received on my email from the Property Investors Council of Australia, PICA. They wrote a 9-page letter, an industry letter, and they've said unsustainable, speculative, law-breaking, self-interest behaviours re-emerging in the property sector, putting consumers and the marketplace at risk. Okay, this is what it says. Our concerns lie in the following actions and behaviours of a growing number of industry participants. The advertising and promotion of property investment. Over the past 6 to 12 months, we've been observing a hyperscaling of social media advertising by increasing numbers of buyers agencies, mortgage brokers, and even accountants promoting unsubstantiated and independently verified claims of outperforming investment returns. We know that. Buying in entity structures such as trusts or self-managed super funds, tax incentives, get-rich-quick messaging, appealing to potentially preying on vulnerable and or uneducated, unsophisticated investors attached to and enticed by the prospects of building significant wealth fast, amassing a property empire, quitting work and socializing their own wealth and success. How funny is this? This is unbelievable. This is unbelievable. I cannot believe what I'm seeing and hearing here. I can't believe what I'm reading. There has been a recent spike in new buyers agents entering in the real estate market, which overall is most welcomed in an open and active free market. That said, in the general buyers agency space, we're hearing news of behaviors and actions that either put their clients' best interests at risks or are clearly outside their qualifications, license, or professional scope of work. A recent report revealed that a certain buyer's agency practice instructs investors to sell property from their personal names into trust structures, allowing them to access more lending to purchase additional properties more quickly. This is not the role of a buyer's agent. They should not be engaging in providing financial advice, but it is happening. We are also gathering evidence of interstate buyer's agents who may not be qualified to buy in a particular state, purchasing property sight unseen and relying on the seller's agent's photos or videos to assess the property suitability. The recent ABC News story, which I've mentioned on my personal socials, highlights the risks some professional operators are putting consumers under and reputation of the industry. This is huge. Importantly, in some sectors of the industry, they are taking note of what is occurring. We are hearing cases of property valuers asking selling agents how many offers they received from buyers agents versus offers from the public. Some valuers are disregarding interstate buyers agents' offers or those offers accepted on recent off-market purchases made by buyers agents. It had also been reported to us via a recent sale in the outer suburbs of Melbourne. The property had 10 offers, 9 from buyers agents working on behalf of investors, and 1 owner-occupier offer. The actual buyers run the risk that the valuer may not value the property at the price their buyer's agent secured it for. This has potential ramifications for securing finance for the property, negatively impacting the buyer for whom the buyer's agent is supposedly working. This is what they're doing. This is what I've been saying all along. This is absolutely crazy. Call for greater transparency for property transactions. We are aware of cases where rebates or referral fees are being paid to industry operators such as buyers agents relating to investment property transactions for services including accounting, insurance, lending, depreciation, and related professional services. These payments are often undisclosed to the property buyer, which raises concerns about transparency and potential conflicts of interest. This is why I've also said on my channel that I don't take any referral fees. I refer you guys to the best people and I tell you who they are so that you can go and contact them directly. You didn't even have to tell them that I sent you, because this is what they're doing in the fucking industry. This is what is wrong with them. Thank you, PICA, for calling this shit out. Ben Kingsley, unbelievable. Thank you, Ben. This is crazy letter, and it just highlights that everything that I've been saying on my channel that you guys have been listening to is not only correct, but someone like Ben Kingsley can also see it or has also seen it. As I said, and to sort of summarize, guys, this is why you need to have that plan. If you're out there and you think it's going to be impossible now, it's not. And the rules have always been the same. Increase your income and increase your cash and increase the amount of capital that you can get your hands on, whether that's through bonus, whether that's through your job, whether that's through a second income. All those sorts of things will always help you. Then once you get rejected by the big four, or potentially you don't have enough borrowing to go through the big four, that's where you can go to second and third tier lenders. The people that are going to help you out and help you get there are going to be really good investment brokers that have done it themselves. Look for the brokers that have built those 10 to 15 to 20 to 50 property portfolios in personal names. They've been able to do it themselves. They haven't had these trust structures. They're the people that you want to work with. If you need to have a look, go to Everything Property, go to those podcasts, go to those chats that I've had with those people, and you will find out who you need to go to and who you need to use. But this is breaking. There's going to be more on this, but I am just so over the moon that this has happened, because we need regulation in this industry. It has been a long time coming. There's people out there offering that advice, going out there and telling their clients to do all those kinds of things. There's the backdoor referral programs, and this is finally calling it out. It's a great day to not be a buyer's agent, to be honest. So I'm ecstatic. Questions, thoughts, queries? Let me know in the comments.